All right, let's talk about what's going on in fintech right now, because it honestly feels like someone hit shuffle on a massive playlist. You've got these huge companies, right? Each in their own lane. And all of a sudden, they're making these moves that seem totally out of left field, but are also somehow connected.
And that quote right there, it absolutely nails it. See, it's not enough anymore to just be a payments company, or just a bank, or just a web security firm. The name of the game now is to expand, to blur those lines, and to try to become this one-stop shop for a person's entire financial world.
So, that's what we're calling this, the Great FinTech Shuffle. And in this explainer, we're going to break down 3 really different stories that show you exactly how the old boundaries between internet infrastructure, crypto, and big-time global banking are basically just melting away.
Which leads us to the big question, doesn't it? What is driving all of this? Is it just raw innovation? Is it a desperate move for survival? Or is it a massive land grab for the future of money itself? Well, let's find out by digging into our 3 players, Cloudflare, PayPal, and Citi.
First up, we've got a company that's famous for, keeping the internet safe and running. And now they're getting into the business of creating money for the internet. Yep, let's talk about Cloudflare.
You heard that right. Cloudflare, the company that basically acts as the internet security guard, is launching its own stablecoin. It's called the Net Dollar, or $N$D. And it follows a model you've probably seen before. It's backed one-to-one by super safe stuff like US Treasuries, kind of perfecting the recipe that Circle's USDC made famous. Now, on the surface, this move is, well, it's weird. It's like hearing that Apple is suddenly going to start making pizza. I mean, it's so far removed from their day job of securing websites that you just have to stop and ask, why? What is going on here?
And this is where you see the master plan. Cloudflare is not just making digital pizza for the fun of it. Look, they already provide the internet's plumbing, right? They run the pipes. By adding their own currency, they're making a huge bet that they can become a fundamental layer for payments too. It's like trying to be Amazon Web Services and Visa at the same time. The goal? Own the pipes and the water flowing through them.
So the big takeaway here is pretty clear. This isn't just about launching another coin, it's about a company trying to become the native currency of the very internet it helps to run. It's a massive ambition.
Okay, let's shuffle to the next track on our playlist. We're moving from a company creating internet money to one that's trying to get you to actually live on it. And for that, we turn to PayPal.
So get this, PayPal just rolled out a brand new platform called Spark, and its purpose is incredibly straightforward. Let businesses pay their employees in crypto. We're talking about their very own stablecoin, PYUSD, but also big ones like Bitcoin. For now, they're really targeting folks already deep in that world. Startups, freelancers, global teams.
And you gotta love this comparison. On one hand, if you're a digital nomad somewhere in the world, getting paid instantly in crypto instead of waiting on a clunky wire transfer is amazing. But on the other hand, for most people, the volatility, it feels kind of like chugging an energy drink right before bed. You get this wild jolt, but it's followed by some pretty jittery uncertainty. It's a real gamble. So why is PayPal taking this risk? Well, because payroll is what you'd call a sticky service. Think about it. Once a company starts using you for payroll, they tend to stay. It's a hassle to switch. This gives PayPal a steady, recurring business. It gives their own stablecoin a real reason to exist, and it creates a revenue stream that doesn't ride the insane roller coaster of the crypto trading markets.
So at the end of the day, PayPal's mission is to take crypto from being just this speculative thing you buy to being a real utility that you can actually live on. And what's more fundamental to your daily life than how you get paid? Okay, for our final move in this big shuffle, we're going to pivot hard. We're leaving the world of tech and crypto and jumping into the world of traditional finance with an absolute giant, Citi. They aren't launching a stablecoin, but they are shuffling their own deck in a really big way.
$2.3 billion. That is the number at the heart of this story. And a number that big tells you something major is shifting inside one of the biggest banks on the planet. So what is that massive number all about? Well, Citi just sold off a 25% chunk of its huge banking operation in Mexico, called Banamex, to a Mexican billionaire. But here's the key part. They're holding on to the other 75%, and that is a huge pivot from what they originally said they were going to do. See, the original plan was basically a full breakup. They were going to spin off Banamex completely with a public stock offering, an IPO. But now, it's less of a breakup and more like a band getting back together for a reunion tour, but with a new lead guitarist. They're keeping the core group, but bringing in a powerful new partner to help steer the shit.
This move is all part of Citi's bigger plan to just simplify, to slim down its sprawling global empire and lower its risk. But by only selling a piece, they kind of get the best of both worlds. They get a big pile of cash and de-risk, but they also get to keep a huge stake in Mexico's banking market, which is poised for some serious growth.
So, long story short, Citi is not leaving Mexico. Not at all. It's just remixing its role. It's going from being the solo act to the headliner with some serious local billionaire backup.
Okay, so a web security firm minting money, a payments app getting into payroll, a global bank acting like a strategic investor. 3 very different stories. So let's step back and connect the dots to see the big picture here.
This really lays it all out, doesn't it? You've got Cloudflare wanting to be the currency of the web, you've got PayPal wanting you to live on that kind of currency, and you have Citi, a traditional bank, repositioning itself to be a smarter, more nimble investor in these kinds of growth markets. Each one is shuffling their core identity.
And that right there is the big aha moment. This is the whole point. The old rulebook is being thrown out. Tech infrastructure companies are starting to act like banks. Payment apps are starting to act like HR departments. And giant global banks are starting to act more like venture capitalists.
Which leaves us with one final and really important question. As all these different worlds, tech, crypto, finance, keep smashing into each other, who is actually going to build the bank of the future? Will it be the tech nerds who run the internet's plumbing? The app developers who live in our pockets? Or the old-school bankers who are scrambling to reinvent themselves? That is the multi-trillion-dollar question at the very heart of this great fintech shuffle.